Joining us to talk more about the market action is Keith Lerner, Chief Market Strategist at Truist Wealth. Keith, good to see you. So we're getting kind of through earnings season, and are you expecting the market to perhaps focus a bit more on macro? And if so, given all the uncertainty out there, does that suggest additional choppiness in the next few months?
Yeah, well, great to be with you. And I think you kind of summed it up well. And the answer is yes. I mean, you know, the bull market, in our view, is very much intact. The uptrend is intact. We've had a healthy reset in valuations. We all know the earnings story is positive. The one thing that's shifted is the earnings season is coming to a close. So what is the market going to focus on? All the things that you and Steve just talked about: inflation, interest rates, the economy, which probably will have more of a two-way trade as opposed to where the earnings season was really more one-way. Ultimately, we still think this market moves higher by the end of the year and into next year, but I just think that we're likely in a choppy period because there's so much focus now just on the macro factors and each economic report, which isn't going to be skewed just to the one side.
So if you suggest the weight of evidence continues to support giving the bull market the benefit of the doubt in this environment, would you be adding to equities, and would you be adding to equities maybe in that more momentum type bucket?
Yeah, so we would certainly stick with the primary trend, which is up. And then for investors that are underweight equities, we would still be averaging in. And if you get some of that kind of typical seasonal, weakness, then we would probably be somewhat more aggressive. As far as positioning, we still think AI and tech is that dominant theme, and we've had a reset in valuations for tech. Last October, PEs were around 32. Now they're around 22, the lowest premium to the S&P we've seen really over the last decade. But outside of that, I mean, what's important is it's not just tech. I mean, in July, we upgraded financials, we upgraded healthcare as well. We're overweight energy, and those other areas are doing well. Like healthcare, obviously, we've seen some positive clinical trials and drug development. Also probably benefits a lot from AI. Got the energy with some of the geopolitical uncertainty that still lingers as well. So I think part of the story, too, is that there are opportunities out there, even if the market is more likely in a bit of a tug of war short term.
How big of an event do you see Jackson Hole this week for the market, given just the uncertainty in terms of what is driving inflation right now, whether it is a temporary shock or whether it's something more secular and more persistent?
Yeah, I think the market can handle somewhat higher inflation that we were accustomed to the last decade, and even interest rates. I mean, interest rates at 4.70, if we were on the show 6 months ago, I think people were thinking 4.50 was the magic level. I think what's important is that the economy stays somewhat resilient. And then along with those interest rates, what we also focus on is credit spreads, seeing if there's, reflection of the economy. And credit spreads are extremely tight. So as we go into this meeting, I think a couple of things we'll be looking at. One is, are we able to, stay below that 480 level where the Treasury Secretary recently stepped in? I think that's important. I think an abrupt move above 480 in the 10-year would be at least problematic on a short-term basis. And then in more short-term, what do we see with credit spreads as well? But ultimately, I would trade a resilient economy with slightly higher interest rates than the reverse of that.
Yeah, I think a lot of people would agree with you on that front. In terms of NVIDIA earnings tonight as a key barometer of that AI trade that you've been following, what are you going to be listening for in terms of what it means for just the broader sentiment, broader demand, and NVIDIA's role in all of it?
Yeah, no, it's a great question because, the stock itself, and, I'm not a stock analyst per se, but it's been flat since October. Part of that is it's already a $5 trillion company, the biggest company in the world. So I think as we look in today, one is the state of AI, and then also if they can provide a bit more clarity on some of the market concerns around the circular finance and really hit that directly. I think, if you look back historically, it's almost been an automatic that they beat on sales and earnings over the last couple of years. So the other thing I think we all want to see is how does it react to the earnings, because we know the earnings are going to be well. And, what's also interesting, I talked about tech, trading at its lowest premium to the S&P of the past decade. You're looking at NVIDIA at this point trading at a discount to the market for the first time really in the last few decades. So I guess the question is, what's it going to take for investors to believe in the story?